In today's video, I'm going to teach you how to use Pepperstone Indices. If you've ever wanted to trade broad market moves without picking individual stocks, indices trading is a great place to start. With index CFDs, you're speculating on the price of an entire market or sector rather than owning the underlying shares. That means you can look at a single chart and take a view on markets like the US 500, which tracks the S&P 500, the US 30 for the Dow Jones, the NAS 100 for the Nasdaq 100, the UK 100 for the FTSE 100, the GR 40 for Germany's benchmark, plus the AUS 200 and JPN 225. You can go long if you think prices will rise, or go short if you expect a decline. First, make sure you're logged in to a supported Pepperstone platform. You can use MetaTrader 5, MetaTrader 4, CTrader, or TradingView if it's connected to your account. The workflow is similar across platforms, so once you learn it on one, it translates well to the others. Next, locate the index you want to trade. Open your platform's Market Watch or Symbols list and expand the indices category. If you don't see any indices in MT4 or MT5, right-click inside Market Watch and choose Show All to reveal all available symbols. Keep in mind that names can vary slightly by platform. For example, US 500 refers to the S&P 500, NAS 100 is the Nasdaq 100, US 30 is the Dow, GER 40 or DAX covers Germany's benchmark, and UK 100 is the FTSE 100. If you're unsure, hover over the symbol or check the contract specifications for details like trading hours and value per point. Before placing a trade, take a moment to analyze. Start with the chart to identify the trend, key support and resistance levels, and any patterns that might guide your timing. Then check the economic calendar for major events like central bank decisions or jobs data, which can move indices sharply. Consider overall sentiment as well, how other global markets are trading and whether risk appetite is rising or falling. Many traders blend technical analysis with these broader cues to set clear entry and exit levels. When you're ready, select your chosen index and open a new order or trade ticket. Set your position size, define a stop loss to cap potential downside, and add a take profit if you have a target in mind. Choose buy if you expect the index to rise, or sell if you anticipate a drop, then confirm the order. Because indices are CFDs, you can trade moves in either direction without owning the underlying stocks. After execution, manage the position by adjusting your stop and targets as conditions evolve, and always keep risk in focus.